Hello everyone, Sat Shri Akal ji and welcome back to our channel once again. My name is Manpreet Kaur और आज हम करने जा रहे हैं ट्रेनिंग सेशन विद किरपा आर्मी कमर्शियल ऑफिसेज एंड रिटेल शॉप्स की ट्रेनिंग. मिस्टर जय सिंह चत्ता, माय हस्बैंड एंड को फाउंडर ऑफ किरपा प्रॉपर्टीज़, आज जय हमें ट्रेनिंग देंगे पूरी टीम को, बिकॉज कमर्शियल रिटेल शॉप एंड ऑफिस स्पेस की बहुत ज़्यादा डिमांड बढ़ चुकी है दुबई में, बिकॉज देयर आर more than 35,000 businesses were opened in last 1 year and we don't have enough office spaces and retail shops. तो demand ज़्यादा है and supply कम है. And गिनती के गिने चुने 2-3 developers हैं जो commercial offices and retail shop बना रहे हैं आज के दिन. So it's a great opportunity for investor who are willing to invest in Dubai and exploring something. Great investment for investors जो high capital appreciation and rental ROI को देख रहे हैं. So let's start with the training session. You will learn a lot. This training session is only for my Kirpa Army to educate. This is an educational session. However, I really wanted to record and present it to you so that you can be educated as well. Dubai's commercial property market. So let's get it started. Let's go.
Anything that's growing, you know that real estate will grow as well along with. So economy is one of those things. Population is another thing. Are people moving into the city, right? If more and more people are moving into the city, real estate again will appreciate. Pretty simple, right? Third is infrastructure. How good is the infrastructure? Are the roads breaking down, or is transportation really bad? Is transportation are they improving the transportation systems? So this is another thing. Infrastructure is another thing, right? So these three things, if you can tell the client that plus, then they have no excuse, you know? There's no way they can say commercial is, or even residential is a bad investment, right? So whenever you pitch to your clients, you have to talk about the underlying factors, because those are the things that mostly experienced investors look at. But even new investors, you can educate them. You can say, look, because of these factors, this is a good investment. Today, we're going to look at commercial investments, and commercial includes retail and offices, other sectors, but we're going to focus on commercial and retail. We're going to cover why Dubai, so I'm going to go through those underlying factors, right? We're going to look at the market trends. We're going to look at what's happening in the market, how many transactions for offices and retail. Then we're going to look at highlights. So, you know, these are just some figures you may want to remember. When you're talking to a client, you can say these things to give them the wow factor, you know, so that they're interested. Because you can't just say numbers all the time, but you have to give them something so that they get interested, like a hook. Then I'm going to go through some areas in Dubai, top areas, what is going on, rental transactions, sales transactions in different areas of Dubai. That's important for you to know so that you can give the entire overview of Dubai, right? You just don't want to focus on one area. You want to give the entire thing so they know that you know, that you're not just, because when you show them that you have studied all of Dubai's market, and then you're telling them about the investment, then they know you've looked at everything. Instead of just pitching one project, you have actually looked at everything, and then you're pitching that project. So then you can say, I've compared all the projects, and this is the best one. Or, you know, these 2 or 3 are the best ones out of the bunch. This way, your investor will have more confidence in you, right? Then we'll look at supply. Supply is really important because you need to know what is coming up. What are the off-plan projects that are going to be completed in the next 3, 4 years, 5 years, right? Benefits of commercial investments, of course, that's pretty self-explanatory. You know what the benefits are, but we'll just list them. Some case studies. So case studies, I think we should do together, and we'll get there. Objections. So some investors will have objections, normal objections that you normally face, right? So we will go through them. And projects and developers that you can go to. I think you guys already know most of them, so we will add to the list. So introduction, again, what is commercial real estate? You guys already know. In the office sector, you have different grades. You may have heard this term, grade A. Grade A offices, you may have heard. Grade A offices are the best quality offices with amenities, with the highest quality lobbies, cafes, restaurants, that kind of thing. Those are grade A offices, right? Good examples would be, if you go to DIFC, our office is, yeah, in the middle of grade B and A, I would say. Because it doesn't, quality-wise it's good, but it's not the best, right? If you go to DIFC and you see, let's say, ICD Brookfield, or give me another one. Which one? Bay Square, yes, yeah, Bay Square as well. Omniat has a few, one by Omniat, I think. Not all Omniat ones, but some of them. Opus as well, grade A. Vision Tower in business. Oberoi as well. Opal, no. Opal's not a grade A. No. Rolex Tower, yes, definitely. So you see, there's a quality factor, right? Grade A, the difference between these three, grade A, B, and C, is quality of the building, the age of the building is also important. If something is, 20, 30 years old, obviously you won't have the same quality or amenities. Even the AC systems, buildings that are new will have the newest AC systems, better cooling, that's also important. More parking, more elevators. So all these things matter. If you go to a grade A building, you will see that there is no elevator problem, right? They have plenty of elevators. There's plenty of parking for visitors and for people in the. So that will be the differentiator. So it's important for you to know because your experienced investors will know this. So the differences between these three grades you have to learn. Then we have retail. So retail are shops, restaurants, F&B outlets, fast food joints, everything that's to do with they can be in the malls, they can be on the road, they can be downstairs on the buildings, in the neighborhood, in residential neighborhoods. That's all retail, right? So a lot of things come under retail, but again, they're pretty similar on where they are, right? So pretty easy to understand. Grade A is just dependent on the building. It's not about the size. It's not about the size of the office. It's not about what's inside the office, because most grade A buildings, right, will have shell and core offices anyways. Shell and core meaning there's nothing in the office. They will give you the AC up to the door. Then you have to do your own. But and then there's concrete. So you have to do your own ceiling. You have to do your own flooring, right? Own fit out, like furniture, everything. Yeah. Most grade A and B and C, whatever, right? They all do this. So that's not, size is never the difference. It's more about the lobby. It's more about the amenities, parking, lifts, experience, right? Location as well, because you won't have a grade A building in the middle of nowhere, right? It'll be in the prime parts of the city. Anyways, industrial logistics, so that includes warehouses, cold storage, last mile deliveries, stuff like that, right? This is also under commercial, but we will not be discussing it today. And then mixed use assets, these are like healthcare, hospitals, other stuff, commercial or retail, right? That's an important question. Some of your inexperienced people will have, right? So you can say to them that prime offices are in the prime areas like Business Bay, DIFC, downtown. These are prime areas, JLT, stuff like that. So the prime office occupancy is above 96% now. So it used to be last year 92, now it's gone up to 96. That tells you that the demand is very strong. A lot of offices and retail is already occupied, right? If you only have 4% left, that means that there's going to be a lot of fighting for those units. So it's important to tell your client this, that the occupancy is very, very high. Then you have record transactions. So from this year to last year, there was an increase. And this year we're already at 170 billion overall. 170 billion in transactions in the entire commercial. That includes offices, retail, warehouses, everything else. Okay? And it's gone up. I'll tell you how much in the next few slides. Business growth. So how many businesses were registered right? In the first half of this year, that's the number I have, 35,000 businesses were registered in the first half of 2025. Okay, last year it was 70,000 for the entire year. In the first half of this year, we have 35,000, and we're expected to do a little bit more than last year. So you have 70,000 last year, 70,000, 75,000, let's say this year, right? That's 150,000 almost new businesses that have registered in Dubai. And they all need some place to work, right? Even if they're working from home, they still need a place to work when they expand, right? As they grow, as the business grows, yeah, some of them may not survive, right? Some businesses may not go forward after 1 year, but most of them should, be operating next year or the year after that. So you have to understand, and this is increasing. This is not slowing down. So the trend is already up for new businesses that are registered. So these are the some factors to consider when you want to hook the client. Okay, so these are the underlying. Now, when I was saying underlying factors, why Dubai? Like, why do businesses want to come to Dubai to set up, right? This is important for your investors to know, so that they know it's an attractive place to come and do business and do work. So let's go through these. Dubai, as we know, is a global hub already, right? It connects the east to the west. East meaning East Asia, let's say China, India, big countries, big economies, and they connect it to the west, to Europe, to US, right? These areas, the Western countries. So they all come together in Dubai. That's one of the things. No income tax, we already know, for individuals. So if somebody's earning a salary, obviously they will want to work here because they don't get taxed at all. It's a big problem. Some of you are talking to people in countries where they have very, very high tax rates, and they're all upset because they don't get the services, they don't have those things, and they all want to move for that fact, right? Population growth. So at the moment, population is increasing by 5% per year, which is very strong, very healthy, right? And these are new people coming in. You know how most populations grow in the world? Bigger families, babies, higher birth rate. In Dubai, it's that plus new people coming in, immigration, basically. So the 5% growth is heavily on immigration. That's important for you to tell. Right now, we just crossed 4 million people, right, in the last month, and we're expected to grow another 5 to 6% this year. So that's great. Low corporate tax. So we are let's say if we compare ourselves to the entire world, this is a table I made for corporate tax comparison. UAE is at 9%, right? Australia is at 25, India is 22, UK is 25, Canada is 15, and then you have more, so you get to about 26. So we're already very low. If you compare us to any other country in the world, any other established economy, we're at only 9%. And this is very new. Infrastructure is the underlying, let's say, driver of the economy, because if you don't have infrastructure, people won't be able to move from place to place. How will they go for meetings? How will they do business? How will they do work, right? Because most of the businesses are moving here and there. Transportation is required. Trucks are needed. Trucks need roads. So there's a lot that goes on that we don't even think about because we just take it for granted because it's there. But you have to realize how much effort, how much energy, how much money is going into infrastructure. That's really important. Okay, one of the safest cities globally, we already know this. Transparent property registration. When you do buy, like, let's say if you're a business owner, you buy a warehouse, you buy an office, you buy a shop, transparent property registration, that means you get a freehold title deed, you are secured, your money is safe because you own this title deed, that gives you ownership of the property. Okay, and it's all transparent because anyone can look up your title deed and verify you, right? That's what I meant by this. Political and economic stability. As you know, UAE is not having wars with anybody else. It's very stable politically and economically. Like the GDP is increasing every year. Abu Dhabi has good control over, let's say, their finances, and Dubai as well. Dubai is very healthy. It means half of the year of 2025, because that's the updated data that we have, okay? So year one, 2020, H1 2025 versus H1 2024, the office rents went up 27%, right? All over. This is overall Dubai. This is not just one place. Overall Dubai, 27. That means some areas went more than that, right? So some areas went less than that maybe, but some areas went more than 27%. That's insane. And again, they're expected to grow even more, by 25% more, right? Because as you know, the office supply right now today is limited. Occupancy is more than 96%. That means that there's very few offices for new people to rent. So then you're going to have that problem. It's going to keep going up. Transaction volume. So this is just for offices, by the way. And we had 1,900 office sales that happened in the first half of this year, which is 21% more than last year, okay? The average price per square foot, this is again, overall Dubai. This is not one area. 1,700 per square foot was the average price per square foot, right? And that's also up 24% over last year. So that tells you like how much growth is happening. And 2.7 million square feet was sold in terms of offices. So that's a big number. Supply pipeline. So if we look at the next 2 years, we don't have much coming. We only have about 3 million square feet coming into the market over the next 2 years, not just like 1 year all in one go, over time. 3 million square feet is again not much when you compare it to how much we have. We have, I think overall in Dubai, the entire supply, we have about 130 million square feet. So imagine 130 million square feet, and we have, Dubai is rented 96% of that, right? So think about that as well. And adding another 3 million square feet, do you think it will move that occupancy level? Will it go down or will it stay? It will stay or even go up, right? So that, and you have to understand, when supply comes into the market, it depends on where it comes. You have to look at the location. So most of this supply, the 3 million square feet, is not even coming in areas where anyone can rent it. It's coming in free zones, like DIFC. In DIFC, you have to get a separate license to have an office there. And it's not just any license, you have to be a finance-related company, right? Or, like one of those, they have very limited, let's say, a realist like us, we can't get an office there. It's impossible because we can't get a license for a real estate brokerage in DIFC. What's the average size of an office? 1,200? Sorry? 1,000? Okay, let's say 1,000, right? 3 million square feet divided by 1,000 is how many offices? 3,000. So we only have 3,000, let's say 3,000 offices. 3,000 offices for, let's say 70,000 companies, new companies. Is that enough? Even if half of them go to business centers or even 6. Yes. Yeah. So that's how you answer that question. Rental yields. So rental yields, look, they range. There's a big range for that. It's not like you can say, it depends on what price you buy at. Depends on location, depends on demand in that area. In Business Bay, if you bought at a good price, people are making more than 10%, right? Easily. Net yield, like net in their pocket, more than 10%. I know some people in JLT who are making more than 15%, right? Because JLT skyrocketed in the past 1 year.
Once I was searching rental in JLT for commercial, and the average percentage was 18-19%. But in Business Bay, it was all 10, 9, 8, or even less than 8. But in JLT, it was 18, 19, even 20% was there in Midore building or something. So why there is this much big difference?
JLT itself is a free zone, right? It's DMCC free zone. A lot of people like or want to have a business in the DMCC free zone because they give many benefits to international companies, trading companies, jewelry companies, diamond. If you go to JLT, you'll see a lot of these kind of companies, right? So they all want to be there because they get special perks. So of course, when you have so much demand for that sector, then you will see a spike in the rentals, right? And a lot of people that own offices, they actually, they work out of those offices. So then you don't have much supply in JLT. In Business Bay, on the other hand, Business Bay has a lot of, let's say, older buildings that were completed before 2010. Most of the buildings in Business Bay were completed around that time. So you have a lot of old buildings. JLT was relatively newer buildings because it took more time to build. So maybe that's the reason. But Business Bay, again, depends on what price you buy, right? If you bought at a good price, you can make more than 10%. So for retail, this is interesting because retail from last year has actually gone down a little bit, right? We have this year, first half of this year, 568 units were sold all over Dubai, which is not a big number, right? And that's 15% less than last year, okay? Then you have, in terms of total size, 653,000 square feet was sold, which is again less than last year. And the average price per square foot was 2,250, less than last year. So why is this? Like, this is a good exercise to learn, because if something is going down, it doesn't always have to be bad, right? The reason why retail is going down at the moment is because there's limited availability of prime retail space. Prime retail space means because most of the prime retail space you can't actually even buy. Like say Dubai Mall, can you buy a unit, shop? Nothing. Any mall, you can't really buy anything. That's the most prime retail that people will consider. Then you have the boulevards. Let's say even in downtown, you can't really buy any shop, right? Even in all the buildings, EMAR buildings, you can't buy any shop. So that's not even on the market. So all the prime retail is not for sale. It's only for rent. That's why the numbers are slow. That's why the new buildings coming up where you can actually buy retail will be in much more demand. That's why you see the prices going up so much. For Shobha's projects, for Bengati's projects, prices are more than 4,000, 5,000 per square foot, just because of this reason. Because you can't really buy prime retail. In Western countries, people are used to having retail plazas. There's so much land in those countries where they can build huge retail plazas. You know Walmart, for example, like Walmart, you guys been to, whoever's been to like Canada, the US or UK, you'll see like big retail plazas. That thing is not common here at all. That's where most of the retail is. But in Dubai, most of the retail is actually on the ground floor of buildings, right? Because we're a high-rise, driven city. So we only have high rises, and the plazas are all controlled by the government or the master developers. You can't even buy there, right? So where is the retail that you can buy? It can only be in neighborhoods, communities like Business Bay and other places, private developers that have buildings, and on the ground floor they have some retail. That's all you can buy. So there's so much limited there's less availability for good retail spaces. So when you think about the future, right, when population is coming in, those retail spaces that you can actually buy, right, anywhere in Dubai, it doesn't matter where, will grow in value. They have to, right, because the rents, because you will control such a limited part of the market. I hope that makes sense. Okay, if there's 10 retail shops in a line and you own, let's say, 5 of them or 4 of them, you control the supply in that market. The smaller the market, the more you control. If there's 100,000 retail units and you own 5, then there's no chance. You don't move the market anywhere. So that's why retail is important. So look, I would talk more about, because appreciation for retail is not something you can calculate today. It's something that you can only see when it's completed, when you have rented the unit. And after you rent the unit, then if the demand goes up, that's when you see the appreciation. You can't see it today. 5,000 is something that's, yes, it's very high, right? And what price can you rent it at depends on the market in that micro market, I would say. You can't base it off of all of Dubai, because here the average price is 2,200, right? If somebody is selling for 5,000, you really have to think hard. Like, why should I pay 5,000 when the average is 2,200? So you have to look at that particular area. I think Bengati, for example, is selling for between 4,000 and 5,000 in Business Bay. So you have to look at Business Bay then. What are the rents in Business Bay? What kind of building is this? Is this a prestigious building? Is it going to have a lot of great tenants? Which tenant can I bring in here? How much will they pay? What kind of because retail is a more complicated, let's say, market than offices. So you really have to go into the depths. If you can figure out what tenant you can bring, you will know how much money they can give you and how much return you're getting. People around the world for retail are used to 6 to 7%, like around that range, because most people that are investing in this, they're getting all the money from the bank anyways. So they're limited equity. You know, they're only spending 10% or 20% from their own pocket, and the rest is given from the bank. So their returns are based differently. In Dubai, we have to look at that model as well. So most of the retail, because it's on payment plans, we can get the money from the banks, right? Nowadays, banks are more happy with giving you money on commercial and retail assets because the growth is there and they see the rentals. So to answer your question again, I would not talk about capital appreciation. I would tell them this is your rental portfolio. Because as the population grows, retail is the most limited inventory in all of Dubai. Like retail will keep being the most limited. Like you won't get much more retail because you can't build it, right? It's impossible to build. There are no plots for retail alone. Very, very few of them exist, okay? So that's how you have to play it. So this is a bet on the future of Dubai, buying retail at 5,000 per square foot. If you rent it for 300 to 400, that's great because you're still making more than what they would make in their country. This is how I would spin it. It's mostly on the rental side. So we have a lot more new projects coming up as well, right? Where some of those developers are not selling retail. Some of them are, some of them are not. Some of them want to keep it because they know how valuable it is. But some developers are selling the retail. So the reason why it's going down this year is because we didn't have a lot of developers who were actually selling. That's why. That's the biggest reason. Shobha wasn't selling retail last year. They just started, right? Yeah, a few months ago. So that data is not here. Next year, we will see a spike because now developers have started selling retail. So that's what you have to explain.
I think they didn't understand.
Okay.
That you understood why it's negative?
Okay,
There was no supply, that's why it was negative. So it's not negative because people were not buying. People were buying, but there was no inventory to buy. That's why it was negative.
Prime areas. If we look at prime areas, like I think if you have an investor who wants to buy retail, they should buy the prime areas, unless they don't have the budget, right? Then you move them to the subprime areas, where Samana, all these developments. Key highlights. So again, these are some things you can keep at the tips of your mind when you're talking to people, talking to investors, when you're dealing with them online. Rents are up 27% year on year. So I think this is a more updated record. Rents are up 27%. There's 35,000 new companies in the first half of this year. There's a lot of finance and tech companies that have registered. Out of the 35,000, I think it was close to 20% or 25% was just finance and tech. That shows you a lot of finance tech companies coming here. That means a lot of finance and tech employees are coming here, right? That's also good for the real estate market. Grade A shortages, like I said, Grade A buildings have the highest occupancies in DIFC, in Business Bay, downtown. So Grade A buildings are being rented first and they're going at very, very high prices. So that's interesting to know because you want to sell Grade A to your investors because they will make money on that. Tenants prioritize efficiency. So again, I was at a developer's office last week and they were telling me all the things you need to look out for when you're buying commercial, right? I'll explain those 4 things to you later. But tenants want more efficiency. They want better buildings. They want better parking. They want, they don't want the hassle of the lifts. So these are things you need to look out for when you're investing your money in commercial. Flex workspaces. So these are like the business centers. There's a lot more business centers, a lot more, let's say, growth in that sector because a lot of people want flexibility again. They want to, let's say freelancers still want an office, but they don't want to rent an office because it's too expensive for them. So all the business center spaces are opening up. So if you have a big investor who's buying, let's say, a full floor, right? They can convert that entire floor into a business center. They can rent it out to a business center. So that's important to know too. Pre-lease supply. So anything that's new that's coming into the market, right? Let's say next year some building is handing over in DIFC, it's already leased before it's completed. That's how much demand there is. So if you try to get a unit, there's a new DIFC Square building. There's 2 buildings in DIFC that are completing very soon, I think in the next 6 months. And if you talk to one of their leasing people, first of all, I don't think they have a leasing team anymore because they leased out the entire building. But if you talk to their team, they'll tell you that we have nothing. We only have limited space, very, very limited, and for small companies, right? So everything is pre-leased. So that's a good thing to tell your people. All right, top communities. These are some sales transaction figures for each area, okay? These are important for you to know. So what this has, this is retail and offices. Retail is the brown one and office is the yellow one, okay? So let's say Business Bay, because Business Bay is always going to be, let's say central business district of Dubai, because this is where most of the offices are at the moment, most of the supply. So in Business Bay, we had 672 transactions. Average price per square foot, right? This is already stock, by the way, was around 2,000 per square foot. For retail, we only had 30 retail transactions, because again, there's not much availability, right? And the average price, 3,000 per square foot, okay? Let's look at an up-and-coming area, Motor City. Motor City only had office transactions. I think Motor City only has 1 building, which is offices. So they had 216 transactions and 1,700 per square foot. Okay, so the big difference. Okay, so this table, this chart, you can see it, you can read it after, but it just shows you transactions in each area. You can show your client as well. This is for rentals, rental transactions. Again, interesting, let's say Business Bay, we had 11,000 rental transactions, right? And this is first half of this year. Sorry, I didn't write that down, but first half of this year, 11,000 rental transactions. And the price that people rented at 152 dirhams on average, right? First half of this year. Okay, so this is a table which includes not every single development, I would say, but most of them. And this is the upcoming supply for the next, let's say, 3 years. Okay, just the next 3 years. There's other buildings which are completing later than this, later than 2028. But if you look at this table, I've put red rows, you have white rows, and you have, let's say, green ones, right? The red ones are like, let's say, the super prime areas, like mostly DIFC, Media City, Internet City, one by Business Bay, because that was a very prime building. It's not for everyone. What the green ones are the ones most companies will be targeting, right? Because, let's say a mainland company, they will normal company, like just like for example us, we won't be having an office in Omniat's building because that's on the that's another level that we're not at yet, right? Most companies will be like, the majority of companies will want something that's suitable for their budget. So that's why I've kept red as the buildings we're not even as a business we're not focused on, but these could be for other companies that are doing like much more business than us, so they can afford to get an office there. Anyways, the green ones are the ones that are mainland, where most of the companies will be going to. And in terms of total number, we only have 5.3 million square feet coming up overall in Dubai in the next 3 years. So this is the number you can tell. So 5.3 million, again, if we do the calculation, how many offices is that? 5,000 offices, right? 5,000 offices, yes, it looks like a lot, but when you even condense it down to actually how many normal companies can rent, it won't be 5,000, it'll be much less, right? So if you only look at the green ones, which I've done in the next one, and I've added more of these projects. These are the new projects that are off plan right now. And some of them are handing over very soon. So there's one that's handing over in 2026. Yeah, so these are older off-plan projects you may have heard of this year, last year, right? You can see AHS commercial tower. You may have seen this in the news or social media. This is on Sheikh Zayed Road, right? This is a very tall tower, 73 floors, I think, and they've pretty much sold out, and they're completing very soon. They said Q1 2026. And then you have a lot more of these. I won't go through the list, but you guys know some of these projects. Capital One in JVC, you know Burj Capital in Business Bay, you know Lumina by Omniat, you know Lumina Alta as well. You know HQ by Rove, I think. Have you guys heard of that project? Yeah. Then there's a few more. So this is the supply that is off plan at the moment, which you can actually sell. Now some of these projects are already sold out, right? Some of them, the new ones, you can learn about them, you can figure out if this is a product you want to sell. So those are the projects. Now in terms of total supply, again per square feet. So this is for the next 5 years. Next 5 years, this is how much supply is actually there for the market to absorb. About 4 million square feet. Okay, 4 million square feet, meaning only 4,000 offices. So again, a very low number when you see that, you know, how many companies are being registered. So again, this is something you need to tell or show your investors so that they can be better convinced on investing in office. Retail, I couldn't find a huge list like this because it's hard to get the data, but we'll be compiling Shobha's Bengati's inventory, and I think a few other, Samana and Zizi as well as retail. So we'll be compiling all that inventory and putting it into this presentation. These are the main buildings which are coming up where people can actually rent. I have taken out DIFC, I've taken out Internet City, I've taken out Media City. So except those, I've kept everything else. This is where most companies will be looking at when they want to rent in the future. Okay. Benefits of commercial investments. Again, I think you guys must have figured out already what the benefits are. Mostly for, again, offices, because a lot of office demand. But retail you shouldn't overlook because of such limited supply, right? Offices, you'll get much more. Retail, you may have, you know, let's say 5 units per building, at 5 units on average. That's nothing when you can think about how many buildings are coming up, times it by 5, and then most of that stock won't even be sold, right? So whatever is for sale is what you can buy, and then the stock will always be limited for retail. So just think about that. That's why the retail price is so high, you know, because the stock is so. After 1 year, you don't have to worry, oh, where do I find another tenant now, right? So this is one of the benefits over residential. If you have an apartment, you may or may not lose that tenant. You may have to find another one after 1 year, right? And the risk is a little bit higher. So risk here is a little bit lower, and you have a much longer time frame for your investment. So you can, you know, if you buy something for $1 million and somebody rents it from you for 5 years, right? And they're paying you, I don't know, 100,000 per year. 500,000, you know you're going to get back, right? So that's why retail is a little bit less risky. Inflation hedge. So whenever you do a rental contract, you can put in the rental contract to increase the rent every year, right? So then you're even more guaranteed, because inflation, you guys know what inflation is. Inflation is basically the rise in the prices, right, of everything that you can buy. And that means if you're $100 today, if you have $100 today, next year it'll be worth how much? $97. Let's say 3% inflation, right? So every year your money, the power of your money goes down. That's why they say never keep your money in the bank, always invest it into something, right? So that you can beat inflation. So inflation here, that's why we increase the rent by 5% every year. That way we can beat inflation. At least we don't lose the money that we have today. I know in DIFC, for example, people have negotiated 30%. And the good thing about DIFC is they don't have the same laws as the rest of Dubai. So you can actually do that there. And RERA as well. But if you both agree as a landlord and a tenant, then RERA is there to protect the tenant mostly for the rent increase, right? If the tenant says, oh, this guy's doing more than that. Okay, higher yields. So commercial has always seen better yields than residential. If the average for residential is 8%, commercial will be 9% or 10%, depending on where it is. And that's always been the case. Right, so we've heard VAT. Somebody was talking about VAT. When you buy commercial unit, yes, you have to pay VAT to the government, to the developer, and the developer will pay to the government. But yes, on all commercial investments, you have to pay VAT on top, right? But when you rent it out, you get the VAT back anyways on your rent. When you're a tourist in Dubai, like Mobeen is saying, you can go to the airport and get your VAT refund. Even for here, yes, even for here. We had a client who paid Enos, what did they pay? They paid something to Dubai Holding. It was some conversion fees for a plot. And the VAT they paid was like 400,000 dirham. That's the VAT, right? So that was a large amount of money. So what happened was they said, okay, the VAT is 400,000, let's claim it back. And then they got the invoice, the tax invoice. They registered for VAT after they paid the money. And then they got it back after 6 months. They got 400,000 back. So we want to claim this VAT back, right? So we told them, we are registered, but they are not registered. So they had to be registered as well. So whoever you're paying this VAT to, they also have to be registered and you have to be registered. Because that VAT that they got, they have to pay to the government, right? And if they don't pay to the government, that's a crime, right? So if they had to, so we got them registered. Now they have paid the VAT to the government. Now we, as the person who has paid, we can claim it back. They invest it, and then they get, they make money on money. This is how, like banking system. The entire banking system works the same way, right? You put money into the bank. The bank doesn't invest it, but they have a system where they go to the central bank. It's a very complicated thing. But the more money you put into the bank, the more money the bank can lend out. Like, to put it simply. So the entire government works on this basis too. Like, they will put that money, maybe, I'm not saying I know where the money goes, but maybe let's say they put it in the bank for 6 months. They'll make some money out of it, right? They'll make 2% maybe. Whatever, doesn't matter. And they'll give you that money back. So for them, they already made that 2% profit on the money you gave them. I'll find out exactly when you can do this, so that your clients will have this question, like, if I can get a VAT refund, when can I? So don't tell them you can right now, right? Until I reconfirm when you can do it. If it's on handover, that means 3 years later, 4 years later. Okay guys, I forget where I was. What to tell your clients: VAT is payable, commercial retail only grow in number and demand, look for grade A assets only, find the best payment plans in the market to increase your return on equity. If somebody is flipping, then yes, you need to look at good payment plans, because the less you pay during construction, the more return on your equity you can get. And a lot of the buildings, actually, 50-50 payment plans are there. A lot of the developers that are launching commercial offices, right? So 50-50 payment plan works amazing, because if your overall value of the unit goes up in the next 3 years, let's say even 10% per year, right? So let's say 30% after 3 years, the property's value has gone up by 30% after 3 years. How much return on equity will you make if you've only invested 50%? Can anyone tell me? Okay, you are buying, let's say you buy an office for 1 million dirhams, payment on a payment plan, 50-50. You're only paying 50% over the next 3 years. This building is about to be handed over, and then you sell it, okay? And you make a 30% profit on top of the 1 million. So how much return are you actually making? 70, 30, so how much is the profit?
130.
So 500 he paid and he is actually making 30%.
No, he made 130.
130.
Because
No, I said that, no, not on equity. I said 30% on the overall value. So 10%, I'm just saying, it's an easy example. If the price goes up, if the market goes up 10% per year, that means the 30% increase is on the entire value of the unit. Yes. So 300,000, if the unit is 1 million, 300,000 is your profit. And your investment so far is 500,000. Plus your DLD, plus your VAT, which we may claim back, we don't know. But you have to add your DLD as well. Don't forget that. Whenever you show returns, always add all the costs. Don't just add the purchase price, because when they get that money, then they'll be like, oh, but it's less than you said, right? So you don't want to miss out on that. So what's the actual return on equity? Not 70. 60, yeah. 300,000 divided by 500,000. Easy, very easy. Come on, guys. In short, you can do that. And your appliances and everything, they have their own warranties. So that you can't get insurance on them, but they have their own warranties. So after the 10 years, yes, you can get your own insurance if you want. Well, look, there's a law for this. It's called the Strata Law. Strata Law is a very old law from the UK, and they started this like I don't know how many years ago. Based on that law, they follow all the rules and regulations. So regarding space, how much common area will be given, how much, let's say, the developer will own after completion, right? Right? Those things are, but after completion, the developer is basically out. The developer doesn't exist anymore because they've completed, they've done their job, right? So then a new company comes in, a new organization, it's called the Owners Association. Right. Every building has its own Owners Association, right? And this Owners Association is made up of all the owners in that building or community, right? All the owners. They get together, they don't really get together, but somebody is chosen as, the head, the president, or whatever, the vice president and all that. So sometimes it's random, sometimes it's based on how much area you own. And then that Owners Association basically collects the service charges, makes sure the maintenance of the building is done. If there's any complaints, it goes to the Owners Association. The question is, okay guys, the question is, if somebody is renting a unit for 5 years, does the landlord still have the right to vacate you after 1 year, even if it's before the tenancy contract ends? I think they can. There is a one, yeah, even if it's within the 5 years. Let's say, so let's say if it's a 5-year contract and after 1 year, they give a 1 year's notice to vacate. Yes. Thank you guys.
All right guys, I hope this session was informative for you. I hope आपने बहुत कुछ सीखा होगा इस सेशन से. So if you have any inquiry regarding commercial रिटेल शॉप्स या फिर ऑफिस स्पेसेस, आप अभी के अभी मुझे मैसेज कर सकते हैं व्हाट्सएप पे, या फिर मुझे ईमेल कर सकते हो. मेरी ईमेल एंड व्हाट्सएप नंबर बायो में लिखा हुआ है. और यू कैन गेट इन टच विद मी ऑन इंस्टाग्राम, एंड वन ऑफ माई commercial expert will get in touch with you, and we will give you overview of the market. We will have a Zoom call and give you more information about this market. So please get in touch with us right now. अगर कोई और सवाल है आपका कमर्शियल के रिलेटेड तो कमेंट भी कर सकते हो और हमें कॉल करके भी पूछ सकते हो. So thank you so much for watching this long video. Have a good day. Bye bye.